Good morning and welcome to Stock Market. Today it's Monday, August 19th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. And I am coming to you today from beautiful Daniel Island, South Carolina, where I'm spending some time with my family, but still hopping on here to talk about what's happening in the marketplace. So U.S. equities were higher in Friday's trading, ending near the best levels of the day, though the S&P 500 still finished with a third straight weekly loss. All sectors closed higher, led by industrials and technology. Treasuries were mixed, with the curve steepening. The 210 spread held in positive territory following some brief bouts of inversion earlier last week. 30-year bond moved back above 2%. The dollar was stronger versus both the yen and the euro. Gold finished down 50 basis points. WTI crude closed up 70 basis points. So again, industrials, tech, and fins outperform. Utilities, REITs, and discretionary were your underperformers. As we get to the desk this morning to start a new week, futures are up 90 basis points. Asian markets were higher overnight, with China up over 2%. European markets are gaining as well. Treasuries are under pressure with the curve steepening. The dollar is firmer versus the yen, but weaker versus the euro. Gold is giving some back now, down 90 basis points, and WTI crude is up 60 basis points to start a new week. Now let's dig in and look at the chart. Strong rally to end a volatile week. Remember last week we said we were encouraged by the fact that we were holding this support level and looking for opportunities. Well, we had a nice pop on Friday. RSI continues to hold below 50. Now, there is a small positive divergence. We talked about it on Friday. But for me, getting back above that 50 level with a rally in the equity market is a key for the bulls. If the market kind of continues to rally back up to 2,900, 2,950, and the RSI cannot get out of bearish ranges, that's a momentum tell that we need to be aware of. So far, we're holding support. Support remains in the 2,800 to 2,850 zone. Resistance is in the area between 2,900 and 2,950. RSI remains below 50, as we said. Chaikin money flow is bullish, but declining, right? Series of lower highs. So the indicators are still mixed. The market's holding support. I think sentiment got a little too one-sided. That's why we saw the rally on Friday, which is starting to follow through here today on Monday morning, at least based on the futures. But we will continue to watch what is happening in the marketplace. I think volatility and a wide trading range are the most likely scenario. And with that in mind, you want to really be focused on the leading parts of the market. So what are we talking about in the note today? Our note to Chaikin Analytics clients, we're talking about how stocks stage a strong rally to close the week. Fine. Yields fall, but a pause is now likely. I think it's a little too far too fast for yields. 10-year yield deeply oversold. If you look at the RSI, I touch on this in my note. I still think the path of least resistance is lower, but we're not likely to go there in a straight line. Global growth fears drive commodities lower. That's been a big play aside from gold. Gold has obviously been the safe haven. To me, though, semis are still the tell for the market, and they continue to outperform. Futures point to a higher open today. Let's look at the power bar ratio now for the major markets. You can see strength across the board, actually led by small caps. Not often that we see small caps outperforming, but they did on Friday. So the Dow was up 1.25%, 4 bulls to 9 bears. S&P 500 up nearly 1.5%, still skewed to the bearish side though. 108 bearish or very bearish stocks, 77 bullish or very bullish stocks. NASDAQ in line to slight outperformer, a little bit better power bar, 21 bulls, 24 bears. Small caps shifting back and forth between positive and negative on the power bar ratio. Back to positive here with 379 bulls, 368 bears following a 2% plus pop on Friday. Bonds down tick, sending yield slightly higher. Industrials were your big outperforming sector. They have been beaten down, especially around the trade tensions. 26 bearish or very bearish stocks. Only 6, count them 6, bullish or very bullish stocks in this group, but they did have a nice day on Friday. According to the Chaikin Power Bar, small cap stocks remain somewhat more bullish than large cap stocks. Major markets, however, are mixed. Let's take a look at our stock of the day now. JD.com. This is an ADR. It's a Chinese company whose shares trade here in the U.S. And it's a great example of a mixed bag and how you can kind of talk yourself into or out of trades and really having a disciplined process. We're going to get through it here in a minute. Power gauge rating for JD.com, which closed at 31.29, up 3.75% on Friday, is very bullish due to attractive financial metrics, strong earnings performance, strong price volume activity, as well as positive expert activity. So we take a very bullish stock. We have a strong trend, but it is in a weak industry group, right? Just beginning to outperform again. So market and model just getting back into gear. Stock is closer to overbought than it is to oversold. Chaikin money flow. It's been persistently strong for the past few weeks, or few months rather. Stock is above the long-term trend line, which is beginning to turn higher. But if we drop the checklist, we can really see that it's a mixed bag, right? Some positives, some neutrals, some negatives. And in an environment like this, I think you want to look for premium setups for long ideas. I don't necessarily think you want to go to these middling names where there's some good, some bad. If you really wanted to, you can talk yourself into it. But if you really wanted to, you can talk yourself out of it as well. To me, that's not a premium setup, right? Bullish and very bullish stocks in leading industry groups. When those stocks are oversold with bullish money flow, that's a premium setup. This is kind of middling. I can see how you could talk yourself into wanting to be long JD, but I'm just not going to get there. Not in this environment. Add it to a watch list. If more of these categories turn to green checks, then it's a better setup. But right now, not really feeling it. Sector tracker now, looking at the movement of the major sectors over the last 5 days. And for those of you who have been listening to me and reading my work for a long time, you'll immediately recognize that is defensive posture at the top of the list. The only 3 sectors higher over the past 5 days are staples, utilities, and real estate. Those are defensive areas of the market. So while I think we are going to see a bounce here, and it's obviously going to follow through, we talked about it on Friday, it's playing out here again today. Understand the structure of the market, understand what's outperforming and what that could potentially mean. Defense, investors are positioning into defensive sectors. Tech, healthcare, industrials, and comms are middle of the road. Materials continue to give some back. If gold weakens, materials are going to weaken, right? A lot of the strength in materials has been driven by precious metals. If we see a little bit of profit taking in the precious metals here as the equity market rallies, obviously materials are going to underperform because the rest of the group, not that great. It's been driven by precious metals. Discretionary, financials, and energy round out the bottom. Energy just continues to be an underperformer. I just can't get there. I know a lot of people are starting to go bottom fishing and look for the quote-unquote value ideas in energy. Not me. I can't get there yet. I'd rather wait for the turn. Financials could see a bit of a reprieve if we catch a back up in yields, which looks to be playing out here a little bit this morning. I think a lot of what's been driving the weakness of late in the financials has been this decline in yields. It's really taken a toll on the banks. Away from the banks, though, insurance has still been a good area to look for ideas. Let's look at our industry in focus now. It's software and services, and this one's kind of been middling of late. It had been one of our big favorites for a while, and now all of a sudden we're not talking about it as much, and you can see why. Over the past 6 months, the software and services subsector has underperformed the S&P 500 by about 1%, so call it an inline to slight underperformer. Power bar ratio is bullish. 38 bullish or very bullish stocks, 36 bearish or very bearish stocks. So technically that earns it a bullish ratio, but we can do the work here. 38 to 36 is roughly even. It's ranked number 11 of 21 subsectors that we look at, and it's moved down 1 slot over the past week. Now, some of the indicative names there are names that, we've spoken about. Leidos has been a big name for us here on the long side. A10, very bullish rating, and Semantic, now a bit of a special situation with Broadcom buying their enterprise business. And probably take that one out of the equation for now. I think that in a group like software, you need to float to the good ideas. You need to float to the Leidoses, the A10s, get those stocks when they're outperforming, when they have bullish money flow, and when they're oversold. Leidos has been a big one for us, which is actually a double whammy because it's in that software group, but it really plays on the aerospace and defense area of the market as well, which has been a market leader for quite some time that we've been all over. I think Leidos is a name you definitely have to have on a bullish watch list. But let's look at semis here, right? Here's XSW. You can see the 38 to 36 bulls to bears, but it does have a neutral power gauge ETF rating, and the trend is now weak as it's below the long-term trend line. And I drew this kind of classical technical analysis uptrend connecting two lows. We've broken that, tried to test it from below, failed again. Right now, look, it's kind of just been an inline performer. Right, relative strength to the market's in line after a strong outperformance. Now it is oversold. Money flow turns bearish. Not something that we want to see. So this is a group that we've loved, and now we're kind of lukewarm on it. We'll see how it. I'll give this oversold position some time to play out, but it's lukewarm. We want to see that out. We want to see the relative strength, and right now software is not exhibiting relative strength. Let's look at what's trending now. Friday's S&P 500 gainers and losers. NVIDIA pops on earnings, helps the semiconductor group. XEC, no real news there to send that stock higher by 6%. CTVA affirms its 2019 guidance. That's good for a 6.5% pop. CenturyLink, CTL, up 6%. No real news. Mylan just rebounds after some negative news headlines sent that stock lower during the week. On the loser side of the board, ADS, preliminary Dutch auction results, sent that stock lower by 9%. TripAdvisor down 1.2%. AMAT earnings down a little over 1%. Macy's earnings down a little over 1%. Follow through. DaVita, didn't see any real news there to send that one down 90 basis points. But aside from ADS, the loser side of the board, not all that indicative of anything. 1%, less than 1% moves. Not all that exciting given the volatility in the market in both directions of late. Let's take a look at what we're talking about now. Small caps remain a relative wreck. Right, and I'm playing on the R's there, but you can see IWM relative to SPY just in a severe downtrend since last May, June time frame, below a declining 200-day moving average. And the move has been confirmed by momentum as the RSI remains in bearish ranges. We've talked about it. Now, something slightly encouraging here with yesterday's or Friday's rather rally attempt and outperformance is we do actually have a series of higher lows for the RSI. Hasn't helped the ratio yet, but it's something to keep in mind. Perhaps downside momentum is waning, right? Think of your car. You're accelerating, you take your foot off the gas pedal, you're still moving forward, but your momentum is decelerating. Maybe the downside momentum in the small cap to S&P 500 ratio is decelerating. So it's still moving to the downside, but with less and less momentum. That's something we'll keep an eye on if it does turn. If we start to make some higher highs, it might make sense to get a little bit more aggressive looking at small cap names. We're not there yet, but this momentum shift does have us intrigued here in the near term. If we look on an absolute basis, we can see that the group has never come close to threatening its August-September highs from last year. I can't believe it's a year now that's passed since that top. And it's just been choppy trading at best with solid resistance at the 160 mark. So I think until small caps take out 160 with some upside momentum to the relative relationship, I think it's going to be hard to get excited there. But it's something we're watching because we're never going to be dogmatic in our views. Too far, too fast for the long bonds. Let's take a look at TLT here. The iShares 20-plus year Treasury bond ETF. It's gone parabolic, and now we're seeing a bit of a reversal. You can see here RSI is deeply overbought and moving higher. This is why I think there's some context or there's some opportunity for yields to back up. I think TLT, IEF, some of these bond funds could see some profit taking here in the near term. Trend is still higher, but just a little too far, too fast, really overbought. Wouldn't be surprised to see a bit of a pullback or consolidation. And additionally, TLT is running into resistance relative to the S&P 500, and that might be a place where it decides to take a pause. Same goes for gold, right? We've been table pounding bulls on gold for a while, but you can see move has gotten a little bit extended from the 200-day moving average, deeply overbought, and bumping up on relative resistance against equities, against the S&P 500. So trend is still very much in place, but I don't necessarily think you want to chase new longs here in IEF, TLT, or gold, the continuous commodity. But, if you're looking for ideas, I like a setup like KLA. In the semis group, bullish stock, strong trend, strong industry group outperforming the market. Oversold with bullish money flow and triggered a buy signal today. Take a look at Clack as a potential long idea. This is what we're talking about when we are talking about premium setups. And if you like what you're hearing here, help us share the word, spread our link around. I will be back here tomorrow. Have a great Monday, everyone.